Okay, so welcome. This is part one of the 5 strategies that I use on a daily basis, starting with liquidity sweeps, untested session highs and lows, fair value gaps or inverse fair value gaps, and PO3 or AMD. And to finish off with, we have FRVP or SVP, which is fixed ranged volume profile or session volume profile. Let's get into it. All right. So, what even is liquidity and whereabouts does it sit? Over here, we have a downtrend with lower lows, lower highs, lower lows, lower highs. And at the lower highs, that's predominantly where the liquidity is stacked. On an uptrend, we have higher highs, higher lows, higher highs, higher lows. And below the higher lows is where the liquidity is often stacked. Now, what is a liquidity sweep? So we have a downtrend. We are creating lower lows, lower highs, lower lows, lower highs. Then we sweep a low, but then price aggressively comes back up and closes below this low, and then attacks all of the liquidity that was stacked above the lower highs. It can form in a variety of different ways. So even in this example, we're in an uptrend, price comes down, sweeps this low, closes back above, and then attacks the highs. Now, how do we identify a valid liquidity sweep? Well, in this example, we're trending down. We've created a lower low, lower high, a lower low, which has swept this liquidity, but then price has aggressively pushed back above this level. It closes. Now, generally, a bullish close above this level will look something like this: a very small body at the top of the candle and a long bottom wick. So price has formed its bottom wick as we've swept all of the liquidity, creating this wick here, and then closes back above this low, ready to attack all of these lower highs that we created on that downtrend. Now, a invalid liquidity sweep would be coming down on this downtrend, creating a lower low, a lower high, a lower low, and then a lower high, where this hasn't closed above this low here. It's actually failed to close above this zone and has further continuation down. Now, how do we identify a liquidity sweep in a bearish scenario? So in this example, we're trending up and we're looking for a reversal. So price is creating higher highs, higher lows, higher highs, higher lows. It sweeps this previous high and then closes below this level. So we've swept that liquidity. We are now back below this high. And just as before, with the bullish scenario, this is the exact opposite. So we have a small body on the candle and a very long top wick. The long top wick was where we swept all of this liquidity, and then this body will close below this level or somewhere around that level. An invalid bearish reversal on this would be something like this. So we've swept this liquidity above here, but price fails to close back below that high. And the uptrend continues. So here's a few examples of liquidity sweeps inside the charts. So it works on virtually any asset class. Here I have just ES. So down here we have a small downtrend, and then it attacks the highs once we sweep liquidity. So we are trending down. We take out this low, we have a strong closure above this low, then price comes up to attack these higher lows. So you'd place your stop loss just below this low. You'd wait for a 15-minute candle closure to confirm and then enter as soon as it closes, and we'll just say we'll target this high here. And boom, there you go. We'll look for another example over here. We're trending down. You can see that price has swept this low here. So we're trending down. Price comes down. This is one of the candles that I was showing you before. So it's got a small body, a very long wick. So that's what's taking out all of the orders or all of the liquidity that's just below us. And then it comes up to attack the highs. So you'd wait for a strong closure above. Stop loss just below the low. And you'd get a very nice 2.5R. So we'll look for a bearish example on the charts now. Over here, so price starts trending up. We sweep this high right here. We have that long wick, small body, accepts below, and then we'd enter on the candle closure. Stop loss would be just above that top wick, and you can target the lows for a nice almost 3R. So the three main important things to consider when looking for a liquidity sweep is identify that you've swept a high or a low. You have a bearish candle, long wick, small body, and then a closure back below the previous level. And you're targeting previous lows. In the bullish case scenario, you are sweeping a level, looking for the bullish candle, so long wick, small body, closing back above that level and targeting previous highs. That's it. So that's the basics of liquidity sweeps. Next, we're going to be jumping into untested session highs and untested session lows. Make sure to give this a watch a couple more times just so you understand liquidity sweeps, and then we'll jump into the next section.